everybody. It's December 30th, 2020, but let's talk about 2021 payroll in Excel. Let's talk about the great state of Maine. That's right, Maine. I haven't been there in so many years, but I did enjoy the time I have spent in Maine in the past. It's a sunny place. People are nice. They like the lobster. Who doesn't, right? Anyway, well, let's talk about Maine tax. Maine has been on top of their game, and they did announce a 2021 rate. They've already issued their guidance here. This is awesome. So everything's ready to go for 2021. So we get to talk about 2021, even though we're still in 2020, and we're going to explain how to code or write a formula to do this, to figure out what the Maine tax withheld should be. It's a little bit tricky, but they do explain it out to you here in these paragraphs to kind of make it pretty easy. I'm going to show you how to do this. So what do you need? This payroll and Excel program that I have, it can help you with your small business in any state. We're going through all 50 states here, and we are on Maine. And that's right, I have like 48 hours to go. Watch me get through all this. Watch me get through all of this. Anyway, we're going to be ready to go here right as we roll into the new year. Anyway, so Maine, like I said, what do you need to know for Maine? Well, you're going to have your employee fill out the Maine W4Me. W4Me, it's for me, it's for Maine, right? You fill it out, your employee's going to fill it out, they're going to choose their filing status, married or single, basically is what you need to know, because that's going to be one of two rates that you're going to have to figure out is whether or not they're married or single. The other information that you really need to grab from this is how many allowances are they claiming. That's that number when they go through this exemption worksheet. That's something that a lot of people are familiar with, is how many allowances. Well, when you have your employee in Maine, like we have employee Gene Hack here, how many allowances? Let's say 2. And do we have any local tax? I'm not even aware of any local tax rates in Maine. However, there may be. Sometimes with local, you never know. So if there is a city or county, let me know and I will add it to this file, but I haven't heard of any yet. So we'll hide that for now. So what else did it ask for in that W4MA? It asked for the filing status, single, married, or being married but withhold at the single rate. So you choose that, and this pops up in red until you fill these in, because all these employees that are in Maine, if you have an employee in Maine, this thing's going to show up in red here, or any other state that needs that. So that's what's telling you what to do. So that's what you do to grab the filing status for the employee and to put that in there. All right. Once that's done and you filled in all your other W-4 information from the employee, let's talk about the gross wages and how that Maryland, not Maryland, but Maine tax is recorded. So I just finished up Maryland. That's why I said Maryland, but we're on to Maine now. So basically, they're going to want you to annualize the wages and then remove the Maine standard deduction. So all these instructions are itemized out in here. And rather than just read through them and go through the logistics, I can just show you the formulas that I wrote to do this. So you annualize your gross pay wages for the period. You take out the $4,300, which is how much the Maine standard deduction is. The withholding allowance amount is $4,300. That's what that is over here. These are all your Maine filing statuses. So once you figure out what this tentative annualized gross income that's going to start to be taxable is, you have to figure out what the standard deduction is depending on what the status of the person is. So all these words here that are saying, hey, if your annualized wage in step 1 is $83,850 or less, and the taxpayer is single, the Maine standard deduction is this. There's a bunch of paragraphs that explain how to do the standard deduction calculation, and this is what you do with it, is you look at how much this income is and you do something to it depending on how big it is, and then you end up with a standard deduction amount that ranges from 0 to 9,700 or from 0 to 22,250 if they're married. And so those are what the formulas do. And then you have to figure out, well, what's this minus this if they're single, or this minus this if they're married. That's what these two are over here showing you, what this new taxable gross really is. And the taxable gross then gets multiplied by a formula depending on which status it is. And that formula is this formula right here, which is if the annualized income is less than this, do this to it. It's one of these formulas. If you've ever seen a federal tax withholding forward or progressive rate structure formula, it looks like this, which is if the income is this, do this to it. If it's more than this, but this, do this to it. The way that looks in the file and to write a formula like that is like this. If the amount of income is less than this, do this, do it. If it's less than that. So I can paste those formulas in if you need to see them, but this is just basically how it rolls through and figures out what by pay period then, because it also then divides this by the number of pay periods in the year to get the per pay period withholding amount. Then you just choose it and then everything's done. And then you have a pay stub. And you can just choose your employees on the pay stub here, and you end up with this Maine tax withholding that is right here, depending on their income. You can toggle with different pay dates and different employees, and the whole thing just rolls together. You have quarterly reports and annual reports, and your main reports are right here, and you can do your reports by month or by pay period or whatever you want, like how much would you owe if you're doing January deposit, or you had to deposit all your money, boom, you'd had to deposit $332 in your main tax for that period. We also have other federal forms and stuff in here. It's a whole big thing, but we just really wanted to talk about Maine today. So it's not too bad, but they do make you write a little formula to figure out what your standard deduction is, depending on whether or not you're in the single status or married tax filing status there. So you do have to figure out this tentative annual gross, and then you have to put it through this ringer. And the formula there, it looks like Maine tax is between 5.8 and 7.15%. Pretty high, actually, but New England tax rates can be high sometimes. So that's how that works. If you're interested in one of these files, contact me and I will get one for your business. Like I said, there's going to be a full functioning 50-state version that will handle everything, and this thing is really coming together. So lots of fun, lots of good times. If you live in Maine, good for you. I say hello to you. And that's about all for now, but we'll be on to, what's the next one? Michigan. I've done Michigan before. I have Michigan in there. We'll do a little Michigan, and then a little Minnesota, and then a little Minnesota. There's a lot of M's here. Definitely got to get through all the M's tonight. So, all right, good look, everybody. Payroll should be easy, so make it so.